The focus begins with China.
It is indeed. Hi there, Francois. Hi there, everyone. A fresh batch of figures suggests that growth in the world's second biggest economy is stuttering. And China's Prime Minister Li Keqiang has conceded that there are severe challenges ahead. He said, speaking at a press briefing earlier, that he worries more about jobs than hitting this year's growth target. As Delano de Souza explains, the Premier may soon be put to that test.
Favouring jobs over economic growth, China's premier indicated Beijing would tolerate falling below the 7.5% GDP target for 2014. The government wants to create 10 million jobs this year, and it says the economy must achieve a growth rate of 7.2%, indicating China's economy would only be allowed to slip so far.
We will not pursue GDP growth above anything else. The GDP growth we want should benefit the people, help increase the quality and efficiency of economic development, and contribute to energy conservation and environmental protection.
China's economy is seen to have had a relatively rough start to the year. Newly released data shows investment, industrial production and retail sales grew at a slower pace for the first 2 months of 2014, raising concerns that the world's fastest growing economy is in risk of slowing. Some analysts believe that without the necessary stimulus measures by the government, it will not achieve its growth target. However, its recent actions indicate it plans on taking a step back. Last week, the government refrained from rescuing the struggling solar company Chari from making a payment on its debt, a move signalling further defaults would be allowed.
And those concerns about a slowdown in China seem to be weighing on global shares. The thinking is that if China slows down, so will a lot of Western companies, mining companies, for instance. These are the latest figures from Wall Street. As you can see there, all three main indices stateside are trading in a negative territory. The Dow Jones Industrial Average is down more than 1%. Similar picture there for the Nasdaq. The S&P 500 down just shy of 1%. We also saw stocks falling back in Europe earlier on those Chinese concerns. The DAX in Frankfurt down 1.9%. The London FTSE, where we are seeing a lot of miners under pressure as well, down 1%. Now, investors, they're also watching the standoff between the West and Russia over Ukraine, and those Ukraine worries are weighing on markets as well. Speaking in the German parliament earlier, Chancellor Angela Merkel turned up the heat on Russia. She said Russia would pay a political and economic price unless the Kremlin agrees to talks over Crimea's future. Merkel said EU leaders are prepared to freeze bank accounts held by Russians abroad and impose travel restrictions. At the same time, the OECD has suspended the process for Russia to become a member of the organization. The Organization for Economic Cooperation and Development is a club for advanced economies. It includes countries like the United States, Japan, France and Germany. Membership is seen as recognition of a country's economic development. Meanwhile, Austria has arrested a Ukrainian oligarch with links to Russia. Dmitry Firtash is one of Ukraine's richest men and owns gas, media and banking businesses. Austrian police acted on an arrest warrant issued in the United States. The oligarch's group calls it a misunderstanding without links to the wider diplomatic context. Some analysts say, though, that it's an American signal that the net is tightening around Russian interests in Ukraine. We are going to turn to the Eurozone next. The European Commission has told Italy to stick to its budget commitments. The warning comes after Italy's Prime Minister Matteo Renzi announced sweeping tax and spending cuts on Wednesday. Renzi wants to reduce income and business taxes to boost the state of the Italian economy, but the Commission says Italy has high debts and needs to focus on balancing the budget.
Italy is in the preventive arm of the Stability and Growth Pact, which means that it is required to focus on achieving its medium-term objective of a balanced budget in structural terms, and linked to this to respecting the debt rule.
Okay, some finger wagging there from the Commission's side. We're going to take a look at some corporate news finally, and Shell says it's cutting exploration spending and laying off staff in the United States. It's seen as a sign that Shell, alongside other oil majors, is struggling to tap into America's shale gas boom. Shell made the announcement as it said 2013 had been a challenging year. Full-year profits fell by more than $10 billion to $16.7 billion in comparison to 2012. Meanwhile, an overhaul at the German flag carrier Lufthansa is showing signs of paying off. The airline has reported a full-year profit of €313 million for 2013. That was lower than in 2012, but better than expected. This, as Lufthansa said, it invested heavily in new planes and a fleet upgrade. And finally, some news from France. Investment firm Altice has sweetened its bid for the mobile operator SFR. French newspaper Le Figaro says the company is offering another €850 million in cash. Altice is the majority owner of cable company Numericable, and it wants to join forces with SFR. Altice is facing off with Bouygues, which is also eyeing the mobile operator. The board of SFR's owner, Vivendi, will meet on Friday to review the bid. So we'll see if we'll get some progress when it comes to that story tomorrow. Back to you, Francois, for now, though.
All right, many thanks for that. Marcus Carlson with all the day's business. Time now for sports.